Hey folks, Dan Frio here with your opening bell for July 8th, 2025. So mortgage rates yesterday, they popped just a little bit. What's going to happen today? Or if you're a homeowner or a home buyer, I have some good news for you today. Not in the interest rate front, because rates, unfortunately, they're going to go up because of some new tariff deals that President Trump came up with last night. But we do have some benefits for people in the new SALT tax deal that just passed in the big, beautiful bill. We're going to talk about this, those out there that will benefit from this and those that won't benefit from this. And then we're also going to talk about what is affecting interest rates for today. So my name is Dan Frio. I do this report twice a day to inform you guys what the heck's going off those things and the whys behind it. So if you're looking to buy or refinance, hopefully I can win your business, because I'm licensed in all 50 states, folks. And we have a slogan here: one application, one credit pool. We're going to shop your loan over 30 different lenders. Well, how do we do that? I'll give you that information at the end of this video. You're here for these. So let's get to it. So right now on the economic front, we really don't have any data coming in today that should really affect the markets. So we have consumer inflation expectations, that everybody bypasses this. We do have a 3-year auction. We're going to see how the rates go for that to get rid of the debt from the government. But here's the news that we want to talk about right through here. Treasury yields are higher as traders focus on the new Trump tariff deals. Well, there was supposed to be the second Liberation Day, actually tomorrow on the 9th, but it looks like the can might be kicked again for those. So we're going to see how those are going to affect interest rates and mortgage rates. We really don't have much news on that front just yet to take a deep dive into that. But what I do want to show you is right through here. Some parts of the new tax bill is called the SALT cap. And what this does is it provides, well, let's get over to it. I actually did a PDF file so you guys can understand what this is. So how does the SALT deduction help homeowners? So if you're a homeowner or potentially a homeowner in some of these states, this is where you're going to get some benefits. So let's get over to the states that do have this and where it's going to benefit the most, and we'll explain to you guys what's going to happen. Okay, so here's what's going on. What is the SALT deduction? The SALT standard stands for state and local taxes. It's a deduction you can take on federal income tax returns for state income taxes, local income and sales taxes, and property taxes. That's what the biggest piece of this puzzle is. What was the problem? Well, the 2017 tax cap had it at $10,000. So homeowners in states like New York, California, New Jersey, Illinois, and Connecticut often pay $15,000 to $40,000 in property taxes. I'll vouch for that because mine is between that as well. They could deduct $10,000, raising their federal tax bill. What changed? Well, here's the big benefit. So if you're in any of these states, this is going to help you with this. The SALT cap is now increased to $40,000 for most filers. Single and filing jointly, it's now $40,000. And the reason why I'm telling you guys, folks, here's the examples on how much this could save you if you're in some of these high properties tax states. So let's go, for example, if you're a homeowner in Texas, your property taxes are $5,000, you can deduct $5,000. But let's say you're in New York or New Jersey or Illinois, where your property taxes are $15,000, $20,000. Let's look at this. Property taxes are $15,000. State income taxes are $12,000. The old way, you'd only be able to deduct $10,000. Well, now you can deduct $27,000, giving you a $7,000 additional tax break. That's going to put an extra $4,000 to $6,000 in your pocket. Who benefits the most? Well, they're right through here. Income phase out, but I wanted to show you this piece of the puzzle. Here's where, and I don't want to get political on here, but I'm trying to understand why people were so much against this bill. And everybody says it helps the wealthy and it does all this other stuff. Well, if you're in one of these states, you don't have to be a multimillionaire to get benefits of this. So let's break it down. The people that voted on this, and I think every one of these people voted no. And again, I don't want to get political, but New Jersey, you voted no. And they're all Democrats. New York, California, Connecticut, Massachusetts, Illinois, only one state, New Hampshire, in here is a state that voted yes for this. So if you guys would help me understand down there, and I get it, I'm trying to understand the SNAPS bill and Medicare and Medicaid, but why, what's the misconception with a lot of these things, so I can help explain it to people, especially homeowners and home buyers. So please put some comments down below. I don't want to get political, but just help me understand why, if people are getting a lot of these benefits and a lot of the benefits that we went over yesterday, Why would you vote no? Just a question out there, folks. So that's what we're seeing across the board right through there. Right now, the bond market, if you look over to that, is down 15 ticks, and doesn't really mean mortgage rates are going to change at all. If you go to a 5-day chart, not looking good. But if you go back to a 1-month chart, maybe we had a really nice rally at the beginning of June. It was a rally all the way through and then started petering out and moving from there. Still, if you look at a 1-month chart, we have better rates than where we were. Let's explain how you read this chart. So if you're new to my channel, here's what we do. When we try to explain interest rates to you, or mortgage rates, we go through here. And I bring up this screen, and there's actually 2 bonds on here that we focus in on a lot. We focus in on the 10-year Treasury because that's usually what mainstream media tells you to follow if you're checking to see what's going on in interest rates, especially mortgages. So when this goes up, well, most likely your mortgage rate's going to go up. But what we actually follow here on the channel is a mortgage bond that trades on Wall Street. Yes, you can actually follow mortgage bonds. So this MBS is, what you're seeing right at the top, the MBS, it is a mortgage bond. It trades on Wall Street. You might even have it in your portfolio. So how do you decipher what's going on with interest rates with the bond market here? If the bond market on the 10-year Treasury is saying 4.42, and we know that's the yield, but you go over to the MBS and you're looking at 99.33. So what's the yield? Well, you actually have to figure that out. So it's pretty simple. Let me explain it to you. If the price of the bond is going down, like you're seeing right through here, that means interest rates are going up. If the bond price goes up, it means rates are coming down. Again, if you look at a 1-month chart, we're higher than where we were, but on a 5-day chart, we're much lower than where we were. So short term, we're kind of getting back there to a little bit higher rates. I don't expect them to go up to 7% anytime soon. I think we're going to be capped out right about through here. I'm saying 6.75, 6.5 to 6.75 should be the range that we should be trading at. So there should be a little bit of movement out of this coming out as soon as we get some more news on the big, beautiful tariffs and what's coming with those, because we already have the big, beautiful tax bill. Now the tariffs are really what's throwing a monkey wrench into the news that we're seeing right now. So I will be back later this afternoon with Stock Talk Tuesday to explain to you guys how this is affecting stocks, bonds, and cryptocurrencies. But I do want to get over to what I am, who I am, and what do I do. So before you turn that dial, I want to explain to you how we have a slogan: one application, one credit pool. We're going to shop your loan over 30 different lenders. So here's exactly how we do it. So folks, I'm actually a federally licensed mortgage loan officer. That means I work at a federal bank, and I'm licensed in all 50 states as well as Puerto Rico. I've been doing this for over 35 years. I'd love to work with you, and you can put my experience to work for you guys. But here's the unique thing we have. When you're out there, you're looking to buy a house or refinance, what do? Well, you're out there trying to shop. How do you shop rates? You Google it or whatever. What if I can offer you one application, one credit pool? We're going to shop your loan over 30 different lenders. This is what we do here on my channel. So I work at a federal bank. We're set up with 32 right now. 32. Well, actually, we just got another one last night. I just got an alert. 33 other lenders. We just got a huge home equity loan program available to us. There's 15 different home loan programs, and I'll give you those options in another video, but they're home equity lines. Fantastic opportunity for people out there not to have to refinance that high rate that they have or the low rate they have to get some cash out. Maybe you can get a line of credit. We'll offer first position, second position. We're even going to offer them on rental properties. So check out that. But here's what we do, folks. My bank is set up with 33 other lenders, giving me the ability to use their rates, their programs, even some niche programs like this. We have one of the investors right now is giving up to $7,000 if you're looking to buy a house. Check out this video. It's based on your income, so I provide you a map in here. What you're going to do is plug in your address, put in your income, and it's going to tell you if you qualify or not. So check that out. If you're currently a homeowner and you're looking for an opportunity to refinance, well, check out the refinance button right through here. What happened is most people miss the opportunity when rates go down, then rates pop back up and you missed it. This will actually give me the opportunity to track rates for you. So want to understand it? Click the video. So the last thing is, if you've locked in your rate or you got a loan estimate, remember I said if you're out there shopping around for rates, wonder if I can review that loan estimate and then say, okay, that one, it works. Or you know what? I can get you a lower rate. I can get you lower fees. Maybe I can do both, lower rates and lower fees. So check out this. If you got a loan estimate already, hit the loan estimate button right through there. You're going to answer just a couple questions, upload your loan estimate right into here. What I'm going to do is I'm going to do a personalized video right back to you, letting you know if you did a good job or can we offer you some savings when it comes to the interest rate and also the fees. So that's what we have so far this morning, folks. So rates are potentially going to go up a little bit. We have the MBS market down 14 ticks. It's making a little bit of a rebound right now. So basically what this is telling us, mortgage rates aren't really going to move much at all today based on the information we have so far, but you don't know what a tweet's going to do to change the whole atmosphere. So thanks for watching, folks. My name is Dan Frio. I'll be back today at Stock Talk Tuesday at 2 o'clock, and then I'll be back at the closing bell to let you know how all this mess ends for the day. Thanks for watching. Bye-bye.